Hi, my foreign trader friends. Yeah, as I promised you guys, I'm gonna make the first video in English of my channel. Okay, there's a bunch of material in Portuguese. I'm going to try step by step make English videos to help you all. First of all, you have to understand that I'm not a professional and licensed trader. I don't have the license to give you any kind of advice. So what I'm going to share here, just part of my knowledge. I don't have a big knowledge in the market, but I have some things that I already know, and I just want to share this with you guys, so we are gonna have a healthier trades in the end. Okay, and the theme that came up is that when you use the futures feature on Binance or in any other exchange, people get really afraid about getting wrecked, right, and lose everything. And this is because people are using leverage in a very, very, very bad way. Okay, and the idea here is show you some calculations. So before starting your trading day, before opening TradingView, before opening Binance or FTX or whatever you use, you have to open your Excel, and you do have to make some calculations just to understand the big picture and really think about how you're gonna get into the trades. Okay, this big formula here that might send men to the moon, this is quite complicated, right? I did it once just to understand everything, and what I realized is in the end things can get much more simple. Okay, so what I'm gonna do here is something very, very, very close to this formula, but in the end it's not this formula, but it will help a lot. It will help you a lot how to get your trades well managed, let's say like this. Okay, first of all, let's think about the situation. Let's think about one token, okay, and or coin, or let's call asset. Asset, there is no problem, right? And our assets are going to be BTC, okay, and the price of this asset, let's say 30k USDs. I'm gonna use always the reference pair as USDs. Okay, I won't write it all the time. And let's say that your leverage is 1. It means that you are using no leverage. Okay, so your position are going to be multiplied by 1. Okay, your margin, let's say here, for example, $1,000. Okay, so you were able to buy about 0.033 BTCs with this money. Okay, and your position size, it's going to be $1,000 times 1. Okay, this is what you do in spot, right? Okay, and what has to happen to you lose all of your money? Okay, BTC price has to go to 0. Okay, so your liquidation price, it's gonna be 0. Okay, oh, but tokens won't never get 0 value. Okay, I truly believe that BTC will never go there, but you can say like Luna, for example. Hi Ducon, how are we doing? Say greetings to your mama. And so the only way to lose all of your money when you make a spot buy, okay, when you really buy the asset, is if the asset value goes to 0, then you're gonna lose all of your money. Okay, but when you use a leverage, things get a little bit different. Okay, let's imagine the same BTC in some different scenarios. Okay, let's say you're gonna use the same margin. Okay, I have to remember that this is gonna be a very long, a very boring video, but only the ones who reach the end of the video are gonna get all of the tips. So if you don't wanna watch it at once, if you wanna split it in 2 or 3 times, okay, make your time management, but please take a look at this video until the very end. Okay, so second situation, hey, come on, it's only 30,000, price is going up without any order of mine. Okay, and now you're gonna use 2 times leverage. Okay, so what's going to happen now? What's going to happen is that your position size, it's gonna be $2,000. because you are using $1,000 to get 1,000 more landed from the exchange, okay? So you are saying exchange, okay, I'm gonna leave $1,000 as warranty and you give another $1,000 and the exchange says okay, but I'm gonna grab the $1,000 you left with me if the price goes down by, oh, come on, goes down by 50%. Okay, if it's a long position. Okay, so if you open a position on BTC with a price of $30,000, okay, 2 times leverage, $1,000 as margin, so you took out of your pocket $1,000 and put it there, and you are opening a long position. Okay, if the BTC price goes down to $50,000, okay, this $1,000 goes to the exchange and your position is closed. This is what leverage is, okay? And I'm gonna put here, for example, liquidation price if it's a long position, okay? And the liquidation price if there's a short position, okay? Short. Then what happens here is that your price are gonna be, okay, here it's 0, okay? And your price is gonna be this $1,000, okay? Oh, this 30,000 multiplied by, how can you imagine how much? Would you guess? By one, oh, come on, 1 plus 1 divided by your leverage, okay? Okay, so if it's a short position, you're gonna get liquidated. Oh, it means that your $1,000 are going to the exchange as a gift if the price reaches $40,000, okay? Let's think about it 10 times leverage, okay? So it's gonna happen now is that you are giving $1,000 to the exchange, but you are gonna collect the profits and the losses of $10,000. I think that's 10 grand. I can say 10 grand. Yeah, I guess I can say 10 grand, but let's say 10,000, okay? So this is what is nice about leverage. You take only $1,000 out of your pocket, but you're gonna get the profits of $10,000. You're gonna get 10 times more profit, but there's a very big, huge price on it. If the BTC price drops $3,000, okay, it means that if the BTC price drops to $27,000, you are gonna get liquidated. You are gonna lose your $1,000. So the benefit is that you get 10 times more profit, and the price you pay is that you have about 10% of a price movement down in the opposite trend you are operating. Okay, you are gonna lose your $1,000. This is what is liquidation. This is what liquidation is all about. And look at this if it's a short position. If the price moves from 30 to 33, you lose your 1,000 grand. Now we can have an experience using 58 times leverage. And then things are gonna get messy or wonderful, okay? Take a look here now. If the price moves only $600, you lose your $1,000. But if the price goes in the direction you want, if it's a long, okay, you are gonna get the profit of $50,000. For the exchange, in the end, you don't have a $1,000 position. You have a $50,000 position. And that's why you get record very quick if you don't make a very good technical analysis. If it's you're going to a short position, if the price rises up to $30,600, you lose your money. Okay, now let's do it by 100 times, and then you're going to start looking very fancy because your position side is going to be $100,000. But if the price moves only $300, you are lost. If 29,700 if you're in a long position, and 30,300 if you're going in a short position. And the maximum you can go on BTC at Binance Exchange, that's where you go. That's the biggest leverage you can use on BTC. You're gonna be a very rich guy because you put on there only $1,000, and the profits you're going to collect is gonna be based on $125,000. It's a lot of money for someone who put 1,000 there, okay? And if you're going to a short position, okay, if you have only a small variation of $240, you are lost, okay? Now you can understand the impact of leverage in your trades, okay? Is this okay? Is this cool for you? Okay, so let's go to the next step, okay? I told you that this would be a very long video. So then you know that the more leverage, the more profits you can have, even if it's a long or a short position, but in the end, you have a very, very small variation that your trade can handle before you get liquidated, okay? Before you lose all of your margin, okay? So let's have these two terms, two names, well, in mind. Margin is the amount of money you take out of your pocket to get into a trade, okay? Position size is the size of your trade according to your leverage, okay? So the exchange look at this number, okay? Well, now you are gonna make a very fancy calculation here, because the problem is to trade is not, please record this mindset now. Please record this sentence in your brain and do never forget this. Trade is all about losses. It's not about profit, okay? First, you have to define your losses. Once your losses are defined, you can start trading. You can start to plan your trade, okay? And if you come to me and say, Augusto, but I cannot lose any dollar, so you must not trade, okay? If you cannot lose, you must not trade. Save some money that you can lose, and then you might think about start trading, okay? Second, if you don't know how to read your chart, if you don't know the basics of technical analysis, you have to use an EMA, or I don't know, some supports and resistance. You have to know something, okay? You have to have some basis. You cannot look at the chart and say, I think the price is going up. Oh, this dip is really deep, so I think it's going to go up. You are gonna get records very quickly, and probably I am going to be one of the guys that are gonna keep your money, okay? Sorry to say that, but that's what reality is, okay? So let's move now. Let's take an example. Your wallet. Oh, that's too many L's. Your wallet has about $500, okay? And today you are willing to lose. Is losing with 1 or 2 O's? I don't know. I forgot now. After you can correct me, please comment. Your lose is right or lose is wrong, okay? You are willing to lose today, okay, 5% of your wallet, okay? So you must not lose more than $25 today, okay? This is your target, and you're gonna respect that. You can lose this in only one trade, or you can divide this in several trades to give the statistic a chance, because nobody wins all the time. Some people wins on and on, and it needs only one trade to destroy the profit of months or even the money of your life, okay? So you have to learn how to lose, and you have to measure your losses, okay? So let's think about trades. You're gonna do today 10 trades, okay? So you're gonna have loss per trade of $2.5, okay? So it's gonna be, you must not lose more than $2.5 per trade, okay? Because you need to do 10 trades, okay? Now you're gonna plan your trades. These are gonna be the asset. Let's take an example, BDC, okay, right? And this is the price. This is gonna be direction, okay? This is going to be the target, and these are going to be, let's say, take profit, okay? Take profit, easier, and your stop loss, and this is going to be your take profit price, okay? And then it's going to be your stop loss price, okay? Is it okay? It's getting easy now, and it's gonna get even easier, okay? Now you're gonna apply the leverage, okay? And you're gonna measure the take profit USD and the stop loss USD, okay? First, okay, let's take the price here, $3,000, okay? It's gonna be a long position, right? Okay, my target price, I truly believe that BTC is going to $32,000, okay? This is my target, okay? Then you have to analyze there, where is your stop loss price? And there's a big discussion about stop loss price, but the stop loss price has to be where your thesis is not valid anymore. For example, your stop loss is when a support is broken. For example, you entered $30,000. There is a support on the $28,000. Okay, and if the price breaks down this support, your long is not valid anymore. Is any longer valid. Okay. So the stop loss price comes from the price action. It doesn't come from your pocket, okay? Because the price doesn't care about how much you have on your pocket or how much you are willing to lose, okay? So let's say that we have a very strong support, $28,000. So this is going to be my stop loss price, okay? $20,000. And this is something important, risk ratio, and I'm gonna write just like this, ratio, okay, ratio, sorry, okay, I cannot write, right? I have to go back to school. Risk ratio, okay? What is your risk ratio? Okay, this is your risk ratio, okay? How much money you can get divided by, I'm gonna do this like this, and this like this, I'm gonna do this. I'm going to do this a little different. I'm going to put here the margin. I have to go back to school. Margin, okay. And I'm going to put here my position size. Okay. Let me calculate in the end the risk ratio. Okay, so my margin is going to be, let's say, I think that I'm gonna put there $50,000, okay, and I really wanted to use a 50 times leverage. So your position side is gonna be your $50 times 50 times leverage. So you have a position side of $2,500, okay. So your take profit, it's gonna be what? It's gonna be the take profit price, right? Come with me now. Take profit price minus the entry price divided by your entry price. Okay? So you're gonna have here about 6%, okay, of profit. Okay? Right? But I have to multiply this by your margin, right? Okay? So it's gonna be $3. If your leverage is 0, you are gonna get $3 in this trade, but you are very, very amazing guy and you decide to use 50 times leverage. So your take profit, it's gonna be $160. It's gonna be a bunch of money, okay? And what is your stop loss? Your stop loss is gonna be the opposite, right? Your stop loss is gonna be the price minus the stop loss price divided by the price. Okay, so you are willing to lose here about 1 minus. Okay, you understand. Okay, I won't do it again. You understand what I mean, right? Okay, so it's gonna be about 9%. Is this trade okay? What do you think about this trade? Let's do one more thing, okay? Now you have to multiply it by your margin, okay? So you are gonna lose about $4 if price moves to, now I understand what's going on. Sorry, it's too late. Okay, it's 20,000, so now I understand what I made wrong. I made it wrong. Please don't kill me. Don't get mad with me, okay? So you have $3. It's okay now. It was the same approach. I made some calculation or some wrong calculation. Okay, and I multiply by my leverage. Okay, so this is what we call a 1:1 ratio. It means that the risk of take profit is exactly the same of my stop loss. Okay, not the risk but the amount. And I hate trades like this because I like only to make trades like 2 for 1. I can have the double of profit than my stop loss, or my stop loss is half of my profit. Did you get it? Okay, sorry about the wrong calculation here. So this is some trades that I wouldn't get in never, okay? But I can go there, I can analyze again, and I see I can get a very good support on $25,000. So now I have a risk ratio 2. It means that if I take a stop loss, okay, I'm gonna lose $83. Okay, if the price reach my take profit zone, I'm gonna make $166. Is this okay for you? Is this a nice trade? I'm sorry, but this is a terrible trade. This is a real terrible trade because you are willing to lose $25 and it's gonna be 2.5 per trade. Okay, so first, this trade, if it goes wrong, it has to take out of your pocket only $2.5. What is the first alternative? I can take the leverage and move it down. Okay, let's say 10 times. It's still not good. 2 times, not good. 1 time. I came back to the same situation as if I was doing something in a spot, right? Okay, so the other thing I can do, I can reduce my margin. I'm going to put here $10, okay? Okay, 30 cents, makes sense. But this is too little, okay? So let's try to increase leverage. Let's go there. Let's go there. Whoa, it's getting better. Let's go there. Let's go one more time. Almost there, 10. Whoa, not 10, 8, 7. This is a complete reasonable trade. Okay? What do you think about this? I'm going to make a comparison here. Okay? Ta-da. Let's think about this the $50 with 1,000 with one-time leverage. So what do you think that is the best? You take out of our pocket $10 to make 4, or you take out of your pocket $50 to make 3. What do you think about? What do you think about? Do you know now why leverage is so dangerous, but how you can use it in a very safe way? Okay? This is what leverage is. You first measure how much money you want to lose in a day. Second, you measure how much you want to lose per trade. And then you start playing. You define and take profit and stop loss price. You have to define this. Then you have to check how much money and leverage you can use just to hit the correct stop loss if your TA, if your technical analysis is wrong. Okay, let's do some more, let's do some more practicing here. Okay, for example, if I want to use 50 times leverage, how should be the size of my margin? Okay, I can put $2 here. I can put $1.5 here. And this is fucking amazing. Do you get it now? You can almost have the same result as you would have with $10, but only with $1.5. Okay? Right? you're gonna lose the same $2.5. You're gonna have the same take profit, but now you're gonna spend only $1.5 out of your pocket. Okay, is it okay for you? Now you know how you can use leverage in a very wise way. But when your TA, your technical analysis, is getting better and better and better and better, what you're gonna do, you might have you might have made a very perfect analysis, or for example, you are on a big uptrend, and you see that price is not stopping, you are in an uptrend, and you check there's a very close support region where you are willing to have $33,000 as your take profit, and it's going to be only 29,500. It's going to be your stop loss price. Okay, now you can do both things. You can put more money here to lose your $2.5, or you can do a very wise stuff and don't put more money but increase the leverage. Okay, let me put $1 here. Okay, and I can use 125 leverage. Look what the hell is going on. Let's put $1.5 here. It's too much, 1.2. Tell me something. Does it make sense for you now? Okay, does it make sense for you now? Is leverage something dangerous, or people are stupid enough to not make some basic calculation? Man, we are going to multiplying and dividing numbers here. There is really no mystery. And then you can go through a very big Excel worksheet and please make your records of every single trade you make. But I was drinking in the bar with my friends and I saw an opportunity. You didn't see any opportunity. You see a very big chance to get wrecked. Okay, it's your money. So you have to sit down at a table quietly, make some technical analysis, put the numbers into your Excel worksheet, in your spreadsheet, whatever software you want to use. Make some very children calculation here. It's only children calculation. Come on, don't be lazy. Okay, and then you discover that you can lose very low money to reach your targets. Okay, so what people does the following. They come here, they put $500, they are going all in with all leverage. Okay, and that what happens. Okay, that what happens. The guy loses this $500 if the price in a blink of an eye. Okay, so guys, I hope this is okay for you. Please, if you enjoy, click your like. If you didn't like, please click the dislike, but leave the comments here. Augusto, I didn't like this video because your English sucks. Okay, I'm sorry, I'm gonna try to get better. Augusto, I didn't like this because I didn't understand the point of leverage, or this point, or could you explain more? Could you make a second video about this or that? Okay, I'm gonna do this with pleasure. I guess my English is going to get better. Each video my English is getting better. And please take part, make part of it. Otherwise, I'm really stop doing this kind of videos and doing only in Portuguese for my Brazilian friends. Okay, thank you very much. Wish you good trades. Please build a beautiful, amazing Excel spreadsheet, and let's make money. Let's beat the market. Bye bye, guys.